Knowing how to calculate a stop loss and when to take profits is something that all investors should know. Today I'm going to show you the easy way to plan your trades, set stop losses and trailing stops, and how and when to take profits easily. And this is critical because many investors have trouble on knowing when to sell a stock, and the reason is often because of the innate human tendency towards greed. This greed often leads to hanging on to a stock too long, and investors will go from a very nice profitable trade to losing money on a trade. Let's show you how to be more profitable today. In today's video, I'm going to cover these 4 topics. Number 1, the 5 possible outcomes of any trade. Number 2, what are stop losses and trailing stops? Number 3, when to take profits and when to take losses. And number 4, some free tools to make this really easy. Of course, I'm not a financial advisor and this video is for entertainment purposes only, so grab a cup of coffee and hang on because this is not your normal stock channel. To illustrate what I'm teaching today, let's start with a recent Tesla trade I made. I bought Tesla at $996.44 on June 17th, and I set a 10% trail stop when I bought it. And I'll explain what a trail stop is in just a little bit. And then on July 13th, Tesla hit an all-time high of $1,794.99. Tesla immediately dropped, and when it did, it triggered my trail stop, and I sold at $1,605.96, and that was a $609 profit per share, which is a 61% profit, and I did that in just 26 days. Tesla is now trading at less than $1,400, and I'm looking for another opportunity so I can wash, rinse, and repeat and do this again. This is an example of letting your winners run to take the maximum profit, and I'm going to show you how to do this step by step so you can do the same. What I'm about to share with you are the 5 possible outcomes of any trade, and once you understand how this works, this can be a game changer for you and make you a much more profitable trader. What are the 5 possible outcomes to any trade? Number 1, you can have a small profit. Number 2, you can have a small loss. Number 3, you can have a big profit. Number 4, a big loss. And number 5 is break even. All you have to do to become a better trader is eliminate the big losses. And the great news is I'm going to show you how to do that at jerryromine.com, free tools, and I encourage you to follow along there. To make this easy, we're going to jump over to my free tools at jerryromine.com, and I encourage you to open up another window and follow along. And I've got a favor to ask. If you're already using my free tools, please drop a comment below and let everybody know how they're helping you with your trading. Thanks a lot. I really appreciate it. Welcome to jerryromine.com. We're in the free tools section, and I would encourage you to check out the steps, links for stock investing success, 6 different things you should check out. We do have different tickers here for the indexes and a couple of different stocks that I really like to watch. If you haven't already watched this video, it is my video for how to do fundamental analysis, and I really encourage you to watch that one. And now we get down to risk management for smart investors. We need to fill out this section, and to get help with any of these different areas, all you do is point to the eye and a pop-up window will come up. So let's say we've got $1,000 available for investing. Our account risk per trade is going to be 10%. The acceptable risk per trade, we're going to put in the number 9 here, and that's just because I want to show you something later on. And then for our profit goal, we're going to say that is 11%. And now we come down and we need to put in a stock and hit get live rate and update. And what that does is it tells us the maximum amount we can have per trade for good money management. There's more details here. We've got the number of trades we could do. So with an account risk of 10%, we could do 10 trades of $100 each. Our acceptable loss per trade is $9, and our overall account risk per trade is 0.9%. And this is following the 2% rule. The 2% rule is an investing strategy where an investor risks no more than 2% of their available capital on any single trade. To implement the 2% rule, the investor first must calculate what 2% of their available trading capital is, and this is referred to as the capital at risk. The 2% rule is a restriction that investors impose on their trading activities in order to stay within specified risk management parameters. For example, an investor who uses the 2% rule and has a $100,000 trading account risks no more than $2,000 or 2% of the value of the account on a particular investment. By knowing what percentage of investment capital may be risked, the investor can work backward to determine the total number of shares to purchase. I really encourage you to stay within the 2% rule, and you can play around with your risk levels by playing with these 3 different categories right here. Now let's take a look at the stock purchase information. On my site, we give you a lot of very important data. These are key metrics that you want to be familiar with, and if you need more information about what the net profit is, just scroll over the eye. It'll give you exact details, and I try to talk you through everything here with these pop-up boxes. We also give you a link to the company's website, which can help you in researching the company, and we have the technical charts. All you do is click the button, and then a technical technical chart will open for you. And here we've got the 6-month chart on Apple, and it's already set up with a candlestick with a 20-day simple moving average. And here's a tip for you. You can see that Apple is trading right along with the 20-day simple moving average. And anytime the stock dropped down close to that would be a good time to buy. And we can see that it currently dropped down below. So I would be waiting for it to close back below the 20-day simple moving average. What else do we have here? You can switch easily between a day, 5-day, 1 month, 3 month, 6 month, 1 year, 5 year, or 20-year chart. We have the volume right here. We've got a simple MACD, which can be very useful, and we have the RSI, which I also like to check. And if you want to add any other technical studies, it can be done right here. So this can be very helpful for your technical analysis. We also have a quick link available to the analyst buy ratings. All you do is click on this button. And here you have the analyst buy ratings, and we can see that Apple is currently rated a moderate buy based on 25 analysts. This is very helpful and useful information for you. We can see that Apple is currently trading at $373.01, and if you need to know more about the company, we give you a description right here, and then you scroll down, and now we get into the good stuff. Plan the trade and trade the plan, and this is built based on this information that you input right here, so you can change it anytime. If we scroll down, we can see sell if the stock drops to $339.44. Scroll over the I. Based on your acceptable risk, sell at this price to limit your losses. So if we scroll up here, we have our acceptable risk right here. You can change the acceptable risk here, and that will change your number right down here. This is telling you a stop loss order can be placed at $339.44, or what I prefer is a trailing stop loss, and it would be 9%. This 9%, more information here. Scroll up, that's where the 9% is coming from. And if you need to know what a stop loss is or a trailing stop, all you do is come over here and it'll tell you. A stop loss order is an order placed with a broker to buy or sell once the stock reaches a certain price. A stop loss is designed to limit an investor's loss on a security position. What's a trailing stop, which I prefer? A trailing stop is when the price increases, it drags the trailing stop along with it. Then when the price finally stops rising, the new stop loss price remains at a level it was dragged to, thus automatically protecting an investor's downside while locking in profits as their price reaches new highs. And this is how I protect almost all of my different trades. In the Tesla example that we had, I bought the stock, put in a 10% trailing stop loss, and then it automatically followed the price up. When it dropped down 10%, it automatically triggered a sale, and I was out for a 61% profit. This right here is golden. We also have our minimum profit price target of $414.04. If you scroll over the I, it will pop up and tell you the profit target is computed off your profit goal and shows the sell price you need to reach this goal. All we do is come up here, and we've got our profit goal minimum of 11%. That's what's computing this balance. Now, let me change these numbers up here to numbers that I normally run. Okay, let me change the cash for investing to a little bit of a larger number. Account risk per trade, I normally keep that at 10. My acceptable risk per trade, I normally set to 10 as well, and my profit goal minimum is normally 20. All we do now is scroll down and hit the Get Live Update, and everything is automatically updated for us. It tells us that our maximum trade amount is $10,000. The number of trades would be 10. My acceptable loss per trade would be $1,000, and my overall account risk now is 1%, and I always follow the 2% rule. And now we can see that I would sell if the stock dropped to $335.71. I would set my stop loss at $335.71, or my preference would be a trailing stop loss of 10%, and my minimum profit target price is $447.61. If you don't already have a Webull account, you should get one.
If you have not already, make sure you sign up for Webull to get a free stock worth up to $1,400. Webull is much more than a free stock trading app, and I have a free tutorial video on Webull that's so good, Webull actually called me after viewing it. Both the promo and Webull tutorial link are in the description below.
All right, now let's scroll down and show you what other tools you've got here. Welcome, Jerry. Here's your portfolio and trading plan. So let's go ahead and add this to my portfolio. I already have a free portfolio here. There's all kinds of information here. If you hover over the symbol, this is going to take you to a Google search for that item. So if you want to find out news on the item, all you do is come here and click. And if you hover over the stock name, this will take you to the technical charts for that item. We can see how many shares we bought, our cost basis, current price, the value, our portfolio percentage. So if you want to have a balanced portfolio, this is very helpful. The PE ratio, our profit and loss, the initial stop loss order, and this is our trading plan, which is critical, our minimum profit target, and any notes that we have. And you can edit these 3 different columns with the edit button here. So let's go ahead and we're going to add Webull as the account we're trading in. The date bought would be 7/29. Whole shares bought 5. My cost basis 335.71. Now I click the add stock button and let's see how it updates the portfolio. And now the portfolio has added Apple to it, and we can tell that our total value of our portfolio is $3,100.10. We also have it broken down by sector. And all of these tools are free here, and I really encourage you to use them. They're going to make you a better trader.
I really hope that you enjoyed today's video and you find my free tools at jerryromine.com very helpful. And I've got a favor to ask. If you found value in today's video, can you please share it with your friends and on social media? That would be really helpful because I'm trying to grow this channel to over 100,000 subscribers, so it makes sense for me to keep on providing these free tools and this type of content in my videos. Thanks for hanging out with me today, and I'll see you soon on a fresh new video.